Dear viewers, have you ever imagined a company with barely $100 million in revenue signing a multi-billion dollar contract with the world's largest software company just a few months after relisting on the Nasdaq? It may sound impossible under normal circumstances, but the story you're about to hear is not just possible, it actually happened. And at the center of it is a company called Nebius Group. This company, officially headquartered in the Netherlands, presents itself as a global tech group focused on cloud infrastructure for artificial intelligence, specifically high-performance GPU-based data center services. In addition, the company operates a data labeling platform called Toloka, a coding education platform named Triple10, and a self-driving technology unit known as Avride. Tracing the roots of Nebius Group leads us straight to Russia. The company originally served as the holding company for Yandex, once considered the Google of Russia. Yandex was known for its search engine, maps, self-driving division, and much more. However, in 2022, following Russia's invasion of Ukraine, Yandex was suspended from trading on the Nasdaq. Roughly 20 months later, in July 2024, Yandex's Dutch holding company sold off its Russian assets for approximately $5.4 billion. What remained of its international operations was rebranded as Nebius Group, which resumed trading on the Nasdaq in October 2024. Under normal market conditions, a company emerging from such circumstances would require years to clean up accounting, separate assets, reestablish corporate governance, and pass regulatory scrutiny before returning to public markets. Nebius Group, however, completed this entire process in just a few months. If that weren't unusual enough, the company soon announced it had signed a major deal with Microsoft, one valued at $1.7 billion, and up to $2 billion including options. But here's where the real mystery begins. Deals of this scale typically follow years of evaluation, due diligence, technology trials, and infrastructure audits. The supplier's revenue history, operational readiness, and infrastructure quality would all be thoroughly validated. In Nebius Group's case, however, the contract was announced just weeks after relisting. This raised immediate questions among investors. According to its Q1 2025 earnings release, Nebius Group generated approximately $55 million in revenue and remained unprofitable. In Q2, the company's revenue climbed to around $100 million, and it reported adjusted EBITDA profitability in its core segment. Yet it remained unclear whether any portion of this revenue included Microsoft contract activity. What's more concerning is that the Microsoft contract remains vague. The full contract has not been disclosed. Public filings from Nebius